Hi guys, I'm glad to have you here. This is Telma Landhorian. I'm here with Elite Consulting, and what we're going to do today is we're going to go over EIDL. The SBA has released some new information, and so I think this is going to be interesting for most small business owners, and so I'll be more than happy to go over any questions you have at the end. And then hot topics with regards to issues that we're seeing a lot of clients deal with, the increased request, the reconsideration, and also the target grant that's still available and not many people know about it or they haven't applied. And then the last part, we're going to go over questions. So a little bit about us and what we do. Let's see if this is going to work. Oh, there we go. Okay, so basically we're a tax planning CPA accounting firm, and the core business of us is really helping clients pay little tax as possible, legally allowed, obviously, making sure everything is in line with IRS tax code, but most people are really not aware of it, and they just assume if somebody is doing their taxes, that means they're somehow helping them with tax reduction strategies, and that's not the case. So we specialize in that, but also we provide CFO and accounting services, month-end close, and forecasting and budgeting and so forth. And now within the last 2 years, we've been really focused on also helping clients with legislation. Consulting means, when the PPP came along, and then it was the EIDL, and then PPP2, and then the forgiveness and so forth. So we've stayed on top of it, trying to help clients navigate through those processes. And so let's dive in, really. What is this? The new EIDL, the basics of it is really a couple of years ago when COVID happened back in early 2020. I can't believe it's already over a year and a half ago. SBA provided this loan. It's not forgivable. It's not like PPP, obviously. You have to pay it back, but it's a very low interest rate compared to the different things you have to go through to get a real loan from the bank. This is a much easier process if you can get through EIDL. So it's at 3.75%. It's fixed for 30 years, and the loan repayment starts in 2 years. And so with, you can actually pick and choose how much you want to take. They will provide you with a range of the loan that they approve you on, and then you can actually pick and choose if you want 10,000 or if you want, the loan started capped out last year at 150,000. So even if you did qualify for more, they just capped everybody at 150,000 to make sure this is going to go a long way, and it did. But now this year, early in spring, they increased the cap to 500. But then on September 8th, I believe, about a couple of weeks ago, now they increased it. They made it available up to $2 million. And so not only they increased the limit, but they also built into flexibility into that. So before it was only for utilities or maybe payroll and very specific items that you could use the EIDL loan for, but now they made it a little bit more broader, and you can actually use it for other purposes as well. And so we'll talk about that a little bit more in detail. So the differences that are really the main 6 changes that we are seeing past September 8th was the loan amount. Obviously, the loan amount went from 500 to 2 million. And a lot of you have asked this question, what if you already got the 500? Would you be able to now go and ask for increase? And the answer is yes. Again, the calculation needs to happen and you need to qualify for it. But if you were capped at 500 and you really should have received more, now that they opened up that gate, you can actually go back and ask for more and ask for the increase. So that's the big one. The second one is that automatically they deferred the payment to 24 months. And so before you had to ask for it, but now they automatically allow everybody to start the repayment process in 24 months from the date that you receive it. I think the main point of the conversation with the differences is, yes, okay, they increased it, but now you can actually use it to pay off off your business loans and commercial debt. And what does that mean? That means really if you have any kind of credit card debt or business loan that you received from your bank down the street, and if the loan interest is less, it's more than 3.75, it makes sense for you to reconsolidate that and really use this because it allows it. Before they didn't allow you to do that, but now they're saying yes, if you have any kind of debt, you can actually borrow it from SBA and then pay your other loans back, which is a good thing. And so by doing that, you can actually reduce your expenses, the interest that you pay and so forth. That's going to help the business grow. And then I think the fourth one is if there are some affiliation rules. Before that, they made it a little bit simpler. Now, for example, if you had, partnership and there were different companies involved and each one had to be separated because the affiliation rule would have impact you had to receive the loan, they made it a little bit simpler. I don't think this really applies to most of the people that are on this call. This is for major companies that had, different kind of ownership structures and so forth. So this doesn't really apply to most of people. And let me know if I'm wrong, but if so, we can go a little bit more in depth on that. And then they also create additional ways to meet program size standard for businesses assigned to NAICS code, beginning with those codes. I'm not going to read it through. What does that mean? So one of the questionnaires, if you actually went through the process of applying, is going to ask you what type of industry you're in. And you might consider yourself, this is a great example. I had a call with a client yesterday. They said, well, I'm an investment company, but then I went back and I changed it to be a consulting company. Well, you can't do that because investment companies they were part of the list that it was, you couldn't do it. Like you couldn't be a lender and then borrow money and then go continue your business. So they had certain codes that you couldn't be identified as to be able to get these loans. And so, for example, one of the major issues for the denial is that you identify yourself when you're going through the application process as one industry, but the tax return that's been actually completed, it identifies you as a different industry. And so if those two are not matching, then you will get denial, meaning like the guy yesterday, he was an investment company, and I'm sure the CPA who prepared the return called him as an investment company or lender. And then he was like, no, I changed it and I'm a consulting firm. Well, it won't work because they will qualify that with the return that you're submitting. And so I think the sixth point that it's a little bit different is that they said, if you have different ownership in different companies, they will cap you. There was no limit before, but now they're going to cap you at 10 million. So for example, if you have an ownership in company X versus Y, and then you were really qualified to get, well, let's say 5 of them, right? Because 2 million times 5 is 10 million. But let's say you qualified to get 2 on each one, they're going to cap you and they're going to say, combine all these entities together, you cannot get more than 10 million out of this. So they reduced the limitation. The next thing is I do want to cover actually what the criteria is. The interest rate, obviously, for across the board, even if up to 2 million is 3.75. The prepayment period for everybody is at 30 years. There's no prepayment penalty. So it's one of the positives about this loan that you don't need to worry about. If you don't use it, you can actually prepay it and there will be no prepayment. For non-for-profits, actually, it's 2.75. For businesses, it's at 3.75. And it's at 30 years fixed. And then the minimum requirements about as far as what the credit score should be. So requirement for what the minimum credit score should be for loans up to $25,000, it's 570. So if your credit score is lower than that, they will deny it. There's no collateral that's needed and no personal guarantee, but it can go up to $25,000. The next category is between $25,000 and $500,000. For that, your credit score is still at 570. You do need to have a collateral, and then you need to complete the form UCC-1, which is basically a lien on the a business. And it's not uncommon. You usually file this with any kind of loan that you go through the process of getting the loan. And then for more than 200,000 or 200,000 and less, you do need to do a personal guarantee. Now, if it's 500,000 up to 2 million, your minimum credit score has to be above 625. You do a collateral, and also you have to, well, I should qualify what I mean by have. You do need to show business real estate. So for example, if you have property that you're operating out of, that will be part of your collateral. But there is conversation that if you do not have that kind of a property to make it a collateral, they will not make the decision to deny you just because of that. So they're a little bit more flexible on it. And you still do need to provide a personal guarantee. And then what are you going to be using this for? You do need to make it so then it's part of your business operation. So for example, if you're in a restaurant business, you can't decide like, okay, now I have this 500,000, I'm going to start rental company, or I'm going to get into landscaping. You can't do that. It has to be really used within the business structure. And now if that is part of the business plan, great, you can use it. But outside of that, for sure, you cannot use it for personal benefits. So it has to be part of business structure. So most companies do run as a single member LLC and so self-employed. So you can pay yourself through your single member LLC and use the funds to pay yourself as payroll, but that's okay, right? But you can't just go ahead and use the funds and just go ahead and buy something personal with it. It has to go through a payroll process and so forth, and you can use that to pay yourself. One of the notes that I do want to make is that make sure you keep the account separate, business versus personal. So don't use your personal account to receive these funds. Make sure it's actually, there's no commingling of funds for any accounting purpose, but especially for this, because believe it or not, they're going to come back and try to make sure everybody did. Because of the high fraud volume that they're seeing, a lot of people are going to have to answer how they use these funds. So don't just take them because it's available, but do think through it. And if you do need it, then obviously take it. But if you don't just take it to have it, right? Let's see. So what are the uses for this? So normal operating expense, working capital, payroll, as we mentioned, and you can put yourself on payroll, rent, inventory, raw material, variable costs, commercial debt, payment and prepayment of that you're going to incur in future, and the loans that you've already taken and so forth. You can actually use this for that. Right. So this is the section I was talking to you about, the affiliation rule. If you do want me to go through this, we can, but there's really not much of a use. Right. So this is, again, for larger corporations and so forth. And the loan should, your company has to have 500 or less employees, not more than 500 employees. One thing that they changed before, it was if you had 20 restaurants and each restaurant had, 200, 300, 500, combination of it. If it was more than 500, you were disqualified. But right now they're saying it's based on location. So even though it's a big organization, if the location is more than 500, that disqualifies you. But if each location is under 500, but combination is more, then you still qualify for that. And so again, the $10 million cap that we talked about. So these were the industries that now they're making it available to. So educational services, art, entertainment, and recreation, food services, accommodations, support activities for mining, appeal manufacturing, clothing, sporting goods, air transition, ground passenger transition, scenic and sightseeing, publishing, motion picture, broadcasting, rental and leasing services, which is interesting because most of my client is in the rental space. This is a good indication that they opened that up. And personal and laundry services and beverage manufacturers. So these are the ones that now are a little bit more flexible for you to be able to apply for. Again, you have to have 500 or fewer employees per location and 20 or fewer locations. Like you can't have 100 locations. It has to be 20 or lower. So they're trying to limit the size of what type of individual or business owners are going to be able to take this. Application detail, they have come up with this timeline, but I don't hold my breath because they've said a lot of times that this is what they're going to do. And last year, as you guys seen, if you've been following this with us, they said one thing and something else happened. So they're saying if your loan size is less than $500,000, they're giving you this privileged window of reviewing your application, going through it, and the approval process up to October 8. After October 8, they're going to open up the 500 to 2 million application size. It does not mean that you should wait until then to apply. You can actually apply today, get in line, and we don't know how they're going to pick and choose. Are they going to pick and choose based on the industry? Are they going to pick and choose based on when you got in line with them? Or is it going to be some other random, lottery format? We don't know, but it's a good idea if you do want to actually apply for this loan. Don't wait until October because that's when they start the review process. So you do want to have everything ready for you to go. And by then, now you're just waiting for them to start the communication process. And so what they're saying is that the timeline for them to get the application for any funds approved under 500 is 3 weeks. I don't think that's going to happen, but okay. And then if it's applications for any funds or it's over 500, it's 6 weeks. And then application for 500 and then increases. So basically they're saying they're going to, use this process to, if you got the 500 and now you're asking for increase, they're going to take 9 weeks because they have to go back and review your prior application. So it's not something that happens right away. We've seen clients that we've helped, sometimes they actually get funded within a week. But then we have clients that we've tried to help from the beginning of June or July and still it's in the process. But most of the ones that are still lingering is because their bank account didn't match with the application name that they had in file. And we're trying to help them clean those up and so forth. So the required documents for any submission, standard document requirements are you need your federal taxes, you need your federal income taxes for 2019 and 2020. You need to complete IRS Form 4506T, which is basically asking IRS to confirm the tax returns that you're providing. So it's basically getting your transcripts sent to them directly. And then for the loans that are over 500,000, they're asking for additional documentation, which is the standard resolution, schedule of liabilities, and then list of real estate, because remember, we need to provide that as a collateral, and also personal financial statement. And so those are the documents that we've seen, that we need to actually provide to clients. And the process is basically, there's a portal that has the intake forms, you complete that. And so they make it so easy. And a lot of people that actually been in that process is that they just get in and they maybe complete it in 5-10 minutes. But after that, they're stuck for 8-9 months in that portal because they didn't complete it correctly. And so that's the problem we've seen, that now we have to go undo, help clients try to climb out of there and then try to process it correctly. And it could be as simple as the tax code doesn't match the industry you've submitted, the bank doesn't match, or some other reason. Sometimes, you use the wrong EIN, or sometimes the tax form that they're requesting, you're not really sure what it is. And so you submit the wrong one and then your application gets flagged and then you're stuck there. And so that's why I would say it does make sense for you to work with someone to help you through the process instead of trying to do it yourself at home type process, because it's a big part of your business. This could actually make or break your business going forward. And then again, so we already went through the document requirements and so forth. You can always reach out to us. You can actually schedule a call and we'll be more than happy to go over your case and see how we can help you. But one of the things I do want to cover is the targeted grants, okay? So the targeted grants got very little publicity, but it's still available. We don't know if it's gonna stay there because the House and the Senate are actually fighting over it to keep it in this $3.5 trillion bill that needs to be passing or not. So that's one of the key areas that they're talking to take it out of the bill, the bill that President Biden wants to sign into law and so forth. Grants are really something that I do want you guys to consider. The criteria to be qualified for those is pretty simple. One, the first category is that you have to be in low income or whatever. They put the map of United States and they decided which is low income and based on the statistics they have. So you might as well be in those areas that you don't even know. So if your business is really, the business address is in that location, you do qualify for this $10,000 grant under EIDL. This doesn't have anything to do with the PPP. It's the EIDL grant that you do not have to pay back. So the first criteria is that for you to be in that location, in one of those earmarked location. And actually, there is a way for us to check and see if you are or not. You can actually do it yourself online. They have provided a link and you can enter your address. For example, I'm in Chicago. Skokie is one of the suburbs here, and one part of Skokie, so it's not even per city or per village, right? One part of the suburb has been deemed to be eligible, but not the other one. So you just have to check. It's very address specific. So figure it out. So that's the first criteria. The second one is for you to show reduction of income by 30% between 2019 to 2020. So if you can prove that, that's the second one. And the third one is for you to have lower than 300 employees. 300 and less employees, you can absolutely apply for that. And it's a grant, you do not pay it back. They're still encouraging everybody to participate. It didn't get that much publicity, but it's still available. So the next thing I do want to go over is the issues with the reconsideration request. So there's a specific format that I think I got over 20 individuals that they said their reconsideration hasn't gone anywhere. So they are very specific on how this reconsideration has to be presented to them. The email, it should indicate what the incorrect information was and reason for the discrepancy. So the email that you're submitting to SBA should be very specific formatted. The first item is you have to state what the incorrect information is and why there is a discrepancy. And then correct the information. Say, this is the incorrect one, and here's the discrepancy, and here's the correct information. And also provide them with legal documentation to support what's true and what's correct. And also in the subject line, you have to include the business name and the file number. Sign and mail the contact information, including the business name, file number, loan number, and a phone number. And then attach the supporting document with a PDF, nothing else, not JPEG, as a PDF. You have to file, and you don't put it in an encryption mode because they can't open it. So just send them a regular PDF. There's a way for you to see if the email was received by SBA or not, and then attach the read receipt to the email so that you know the SBA has received it, so it didn't go to their junk mail. Then last thing is to make sure you send to the address listed on the decline letter. Just don't send it to a random SBA email. Make sure you get the decline letter and use that for you to reference it for the reconsideration. So some of the possible decline causes, I'm going to read them through. Some of them are incorrect banking information, as I mentioned before. The address doesn't match the application. Maybe different addresses on the driver license and the insurance and the utility expenses that you provide them as a supporting document. Maybe you haven't filed your federal taxes. Because of that, they can obviously process it. Incorrect EIN or Social Security mix-up. So instead of you putting the EIN, you put the Social Security or vice versa. And then incorrect number of employees. You have to be able to show, if you're really in the 200, 300 level, you have to be able to show your payroll documents to show that exactly the number of employees. Incorrect ownership percentage. And so if that's wrong, they will deny it. And financial information, including revenue and cost of goods sold, are not accurate. You could just say, my gross revenue was $1 million, but when they look at your Schedule C or your S Corp, actually it does not match that. So you have to make sure those are really up to date and you're using the correct information that IRS has. It could be that your CPA had to amend the return and so forth, or hasn't been filed, or the file you have in your hand is not really the most up-to-date one. It really matters what IRS has. So it makes sense for you to make sure it's the file that IRS actually has recorded for your EIN and use that revenue information to apply for it. The last, main reason that it could be that it was denied is that you had duplicates of the application and they have conflicting information. So they're not sure which one is true, and so they just are not moving forward with that. So those are some of the more common issues that we've seen cause the rejection, but it doesn't mean that we cannot ask for reconsideration. The SBA now is satisfied with those answers and then move forward to completion. And so as far as what documents to provide, again, we talked about that, Form 4506T, which is your transcript, valid driver license, front and back, or passport. And then those really should match the address, if it's a Schedule C type business. So those should really match your address. Copy of canceled check, you can send that in so they actually can see what the company name is and what the address is. And then 1 to 3 years of federal tax returns. So 2017, 18, 19. And then if you have the 2020, great. Just make sure you include all the schedules and send them. And then if you're you shouldn't be on extension anymore if you're a business owner for 2020 because the deadline was last week. But if it's a Schedule C and it's your 1040, provide financial statements with P&L and schedule of liabilities for your 2020. And then you have to complete the Form 2202, which is the liability list, and then additional supporting documents. Send them everything that they need so they won't ask for it, like even send them the bank statements and reflecting the revenue. So if you're saying you had $1 million gross, but your really transactional only supports 400,000, obviously that doesn't go anywhere. So you have to be accurate. You have to be truthful in your application. Otherwise, they have ways for them to qualify it, and that's why they cancel it. So you better do it correctly in the first place. And then the other thing is that if you are delinquent in credit issues, and you're going through bankruptcy and so forth, those are really causes for them to decline it. So you could put a explanation of why that was the case and what you're doing to get out of it. So if it was the health issues or so forth, because one of the major reasons for bankruptcy is actually health reasons and so forth. So they might consider it. It's not 100%, but they might consider it. The grant that we have available right now is basically the EIDL grant, which is still available, but you have to qualify, and the location of your business really dictates the rest. Now, obviously, you have to be able to prove that you had 30% reduction, but you can still apply for that. And September 27, that's on chopping block. So if you want to get in, let us know. We'll be more than happy to help you. Yeah, so the one that you got under 10,000, that was the advance. So this is a grant in addition to the advances that you guys received, right? So when the EIDL came, it was the first time that it actually was put in place. They said, if you have one employee, you're going to get $1,000 as an advance. You don't pay this back. It's just a gift to you. If you have 3 employees, you're going to get $3,000 as advance. If you have 12 employees, you're only going to get up to $10,000. So they capped it at $10,000. That's different than this targeted EIDL grant. The targeted EIDL grant is, again, for disadvantaged locations and so forth. And so it's very much location-based. And so those are two different things. So you could still have the grant, the $10,000, but maybe you receive 2,000 or 3,000 or 7,000 in form of advance. So those are not the same. They're in addition. Can you pay off a property that's rented by the business currently to purchase it? If the property is owned by business and it has mortgage on it, you can pay it off. I hope that answers your question. before this new September 8th update that they came up with, that is true. You couldn't grow your business and so forth. But now that they've come and they've said you can actually prepay even your debt for your business now, because they say you can actually pay your debt, right? You can pay if you have credit card or business loan, you can pay that off, no question, but also you can prepay it. So why would you prepay something? Because you're expanding, because as long as it's within the same line of business, my take would be, again, that you can actually use it as long as it's within the operation of the company, you can use the funds. Okay, Tiara is asking, what if you don't have 2017 as my business was established in 2018? That's perfect, because Tiara, if your business started in 2018, you qualify, right? Because one of the qualifications that the business had to be in place in 2019 or prior to that. And so you're good. Like, you can't just say, I started my business in 2020, because that's after the fact. Actually, I think it's February 27. If you were in business prior to February 27, 2020, you qualify for that. Yuri is asking if there's any prepayment penalty for this loan. No, there's no prepayment penalty. And that's why it's really good to be on safe side and build your arsenal for your company. And if you don't need it, just pay it off and be done with it. Okay, so I think I went through all the questions. Eric is asking, what's the fee the company charges up? Yeah, Eric, I'll be more than happy to go over that. Let me give you a funny story. Yesterday, I had a prospect. I don't know if he is on this call, but I won't name. He's like, just tell me, how much do you charge for bookkeeping or accounting services? And I looked him up, and he was actually, in a buy houses. And I replied back to him and I said, how much would you, buy my house from me? I don't know. I have to talk to you, Eric. So the same thing goes to you. I will be more than happy to have a discussion with you. And if we see there's something I can help you with, we can definitely make that happen. Okay, Eddie is asking, what if we have multi-types of returns over a few years, like 18 is 1065 and 19 is Schedule C? So Eddie, how is that? So basically you're saying in 2018 you had a partnership and then the partnership dissolved and now you're in Schedule C, or you have separate entities. And so if you have separate entities, each entity can apply as long as it meets the qualification. But if you're the same EIN changed the way the structure of the companies, we just have to see. I can't answer that. Really, we need to know if you are no longer a 1065, how is it then your Schedule C? So we need to look into that. I can't. I see. So 2018, the partnership was owned by a new individual owner. Yeah, I mean, in 2018, whatever your entity structure was, because 2019 is where they're focusing on. You needed to be in business in 2019. If that's the case, then that's how you're applying. Billy's asking if I've heard anything with regards to restaurant revitalization program from the government. That's one of the things that is really not moving, even though they should have focused on that more. We haven't seen much movement on that front. So no, it's just basically it's in a standstill. So those are the questions here. I'm not sure if there are more on this side. Let's see. Let's just check the time. Yeah, we're 3 minutes over, but I appreciate you guys staying with me. Again, we'll be more than happy to help you out if you are in any situation with regards to having the reconsideration done, or if you haven't applied, like Eric, that you haven't applied for the any of these COVID relief fundings, we'll be more than happy to help you move forward with those as well. But yeah, I guess the timing is important because these grants do go, and if you are not sure if you need to do or not, I would say just consider if you need it, don't wait, right? If you don't, then don't apply. You just want to be in a safe place and just keep it conservative. Let's see, I think 2 more questions and then we'll be done. What I'm hearing is if I started 2020, I don't qualify for a new business. Correct. But if you just started a company and it wasn't in place in 2019, then you don't qualify. So think of it this way. 2019, life was great. Everybody was doing their thing. And then COVID happened. And so COVID happened, things went down. And because of that, government said, we're going to help you out. So if you didn't have the business, then there's really not much that you were impacted by because you actually started business after COVID. So good for you, but they can't help you with that. Yeah, so Alex, I'll be more than happy to have that conversation. But guys, thank you so much. I think we did it, and probably we went through the answers, the questions most of you guys had. So again, more questions, more updates. If anything else changes, I'll do these. We did a lot of these for the PPP and EIDL last year, but there was really not much. We were in status quo for most of this year, but now this was a new change, so I did want to bring it to your attention. But I am happy to have all of you here, and thanks for staying with me. Okay, we'll see you guys soon. Bye.